But you know what? I'm telling the seller that I'm only looking to buy here. And if he can't honor that request, I move on. So remember, guys, the difference between traders and investors is that investors analyze their risks and they enter based on the least amount of risk. When you focus like that, the money tends to come. Don't focus on how much money I'm going to get because you can't control that, but you can control the risk factor. Are you tired of your charts looking like this? Well, there's a better way, and I don't want you to make your charts look like this. You don't need a whole bunch of lines, indicators, or anything else. This is how your chart should look. I'm going to show you how to analyze your charts without relying on indicators and identifying levels simply using the rectangle tool. Sometimes charts can be confusing with a whole bunch of candles and you don't know exactly what to make out of it. In this video, we're going to analyze gold and I'm going to show you exactly how I do it without using any indicators and how price typically respects my entry 90% of the time. Am I lying? Just ask our students. We have signal service. We drop trade ideas often and over 90% of the time they follow. So let's go ahead and dive into it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on.
All right, traders, so your chart's looking like it's all over the place stops right now. Let me show you how you should analyze your charts. First, you want to start off on the higher time frame. Now, the higher time frame can look different for anybody. I'm starting on the daily time frame because I simply want to look for patterns and I want to look for direction of price. So daily time frame shows me that we were in an uptrend previously, and then it now looks like it's starting to consolidate. If I can see that without going any higher, I'm perfectly fine. The only time I want to go higher is if I can't really see structure completely. I can see the same thing on the weekly. We were in an uptrend and now we're consolidating. Consolidating simply means price is moving sideways. So now that I have that out the way, I know that I'm in an uptrend. It's good to know exactly what you're trading. I'm trading gold, and gold typically rises against the United States dollar over time. You can go months, and even years prior to this, and you'll see that gold has been rising. So my bias is I want to buy, but I want to buy at a discount. So now I'm going to get my rectangle tool, which I've saved right here, and I'm going to simply draw the top. Now, overall, I'm trapping price because when you trap price, it makes your chart look a little bit easier on the eyes. You can start to predict movements. Now I'm going to clone this here and drag it to the bottom because remember I said we're consolidating. Consolidating simply means you're moving side to side. I'm hitting resistance to support, resistance to support. Now you can see how it becomes a little bit more predictable. And because I have a bias that I want to buy, because gold typically rises in nature, right? I want to buy at my support level. So I typically want to buy at my demand level. Demand level is pretty much like support, but there's some differences. But I'm going to put demand here so that you can remember. And I'm going to put discount because demand equals discount. Remember, when you're buying, you want a discount. And at the top here, this is my supply zone. Supply means surplus. So that means that we have a lot of something, right? And whenever price is a bit expensive, we want price to drop because if it drops, it attracts buyers. Now I'm going to adjust my demand level just a bit. And the reason why I'm using this zone as a demand level for where I would like to buy is because I see from here, there was rejection. This was our previous support, shot up, previous support, shot up, came down just a bit, and I'm completely fine with that. Came down here, shot up, came down here, and shot up. So that's why my rectangle is a bit wide because I want to encompass the previous price action. Now, I do believe price is going to come down from this zone down to here. Now it can come from here or even further because I'm looking left from where it rejected in the past. And typically when price was at a discount and rejected before, you're going to see the same thing. So anywhere between the top of my rectangle to the bottom. So I'm going to put my line here waiting for price to drop. And then I will look to buy at this zone here. Now your take profit is completely up to you. If you're a swing trader, if you're a day trader, it all looks different. But you can see how just simply analyzing my chart without using any RSI indicator, any Bollinger Band, it just looks a little bit more pleasing to the eye. So one, I'm using less risks. Why? Because gold usually rises in nature. I'm not selling it. I only really like to buy. So that's reducing risk there. Number two, I'm buying at a discount. Notice that I'm not buying anywhere up here. That's riskier. Now, eventually, I believe price is going to break up higher because gold rises in nature, but I'm not taking that risk. I rather buy low. So you see how that I'm minimizing my risks simply by evaluating my investment. Just like when you're buying a home, if you plan on selling that home in the future, you want to make sure there's no termites. You want to make sure that there's good foundation to your home. You want to make sure that the neighborhood is well and kept up. So there's things that you want to look at that will reduce risk risk. And it's nothing different than trading. And guess what? If price never comes down to the zone, I missed the trade. There are literally a number of different things that you can be trading: stocks, Forex, ETFs, indices, futures, options. There's a lot of different things. But you know what? I'm telling the seller that I'm only looking to buy here. And if he can't honor that request, I move on. So remember, guys, the difference between traders and investors is that investors analyze their risks and they enter based on the least amount of risk. When you focus like that, the money tends to come. Don't focus on how much money I'm going to get, because you can't control that, but you can control the risk factor. And if you think of it like that, money comes automatically, guys. So guys, this is a quick, easy analysis for gold. I want us to track this together, okay? Currently price is at around 3,293. I want price to come down a little bit further, let's say around 3,260 or 3,258. I do believe it can go as low as 3,224, but anywhere within that zone, we should get some nice profit. You can take it back up to this resistance level, or even prior to that to around 3,375-ish. All right, guys, let's watch this together. God bless you. Let me know in the comments if you have any questions. Like, subscribe if you haven't already. I'll see you in the next analysis. God bless you.